Hey, what's up, traders? And if you don't know me, I'm Danny from FX Trader 2024. Today, we're talking about the ORB strategy, opening range breakout. So this is a trading strategy that looks at the first few minutes, or should I say the first 15 minutes of the market open, mainly on the New York session. What I've noticed is a few people, well, more than a few people, use this at the 8 a.m. open of the New York session, and then I've noticed they use this at the 9:30 a.m. New York session open when volatility kicks in as well. And I've seen both strategies working. So let's just jump right into it and let's go down to the 15-minute time frame. Boom, here we go. So we're not doing no replays, we're just going to be looking directly at the charts. So this is today, London session's just opening up. See, I'm an early bird on the markets. This is what you got to do. So with this blue shading in the background, so I've got the blue shading, I've got this green shading, and I've got this orange shading. If you can see just below it, you can see that's orange is the London session opening, the green is the New York session opening, and the blue is the Asian session. And this is where we're looking for the ORB, the opening range breakout. So let's zoom in on the 15-minute candle. So if you just get the box tool out, so we're looking at this candle here, as this is a 2:30 p.m. candle in London session, which is the 9:30 a.m. New York session. You wait for the first 15-minute candle to be formed. What you do, you mark out the high and the low, and you wait for price to break out of this range. So if I just turn off the indicator for the trading sessions, as we know, and this box is the range, the rectangle tool. As you can see clearly, this strategy has already played out within the New York session. So what you do is when you've marked out the 15-minute open range high and the low of the first 15-minute candle, you drop down to the 5-minute or the 1-minute and you wait for a breakout or a setup where you could enter your trade. So if we drop down to the 5 minutes, what we want to see is a breakout of the ORB. We want to see a retest and then a push to either direction, up or down, whichever way the market's going. So as you can see here on the 5 minutes, we did have a breakout. Now, if we zoom into the 1-minute time frame, let's have a look what was happening. So here's the 15-minute candle that was formed. As you can see, we've had a breakout to the upside. We want to see some sort of retest and a push to the upside. Usually, I've seen traders just go for the breakout, the retest, they enter into the trade and they just watch the trade play out, either win or lose. But what I do, I look for a couple of confluences. Some people say, okay, you shouldn't trade when it goes back in to the ORB. So within the 15-minute candle, you shouldn't trade from within that range. But what I do is I look at overall market structure. So if I just put these indicators back on so you know what time frames we're looking at, this is our 15-minute opening range breakout. Before I take my trade, I want to know what the overall market has been doing. So if we zoom out to the 30-minute time frame, we can see the market has been going up in an uptrend. So what I'm looking for are buys. So if I zoom back in to the 1-minute time frame, on the higher time frame, we're clearly making higher highs and higher lows. So the 15-minute candle has been formed. We've got the open range breakout high and low, and we've had a retracement back in to the opening range breakout. As we were on an uptrend, you get your Fibonacci retracement tool. You go from the swing low to the swing high on the 1-minute time frame. You can see price has come in below the 50% discounted area, and we have a clear fair value gap in that area. As price looked very choppy yesterday and price was coming back into the ORB, usually guys wouldn't trade this. But if you look at the overall market structure and see what's going on, you can see there is now an entry from this fair value gap. So what you could have done, if you get the long position out from the top of your fair value gap, say to just below the fair value gap wick, you could have caught a quick 1 to 3 and you would have been out for the day, or you could let it run to a 1 to 6. Now, some people wouldn't have traded this and would have left this alone. They would have waited for another breakout out of the opening range, a retracement, so they want a retest of this area, and a lot of traders would have just entered a trade here. on the retest and they would have went for a quick 1-1 or a 1-2 and they would have been out for the day. So yes, the ORB strategy does work, not always in choppy markets as well, in horrible conditions. Sometimes price will just break past you, but if you do your back testing and you get your win rate, you will realize if you are trading the ORB correctly, you will get a higher win rate. So you will be a profitable trader from this one strategy. But I think if you look at overall market structure and trade with the trend and not against the trend, and even if you find an entry within the open range like I did with this fair value gap, you could get a tighter entry with a smaller stop loss and a higher take profit win rate. Some traders do the opening range breakout using a 5-minute candle, but I believe it works better with a 15-minute candle. You've got more room to play with. Some traders use this with the 8 a.m. New York session opening 15-minute candle, but most traders use this with a 9:30 a.m. New York opening session once the volatility kicks in and there's more movement in the market. And just a few things to avoid. So the classic mistakes that the beginners make are entering immediately on the breakout. So if they just seen this little breakout happening here and they've seen a small little candle just break above the ORB, they'd enter immediately just to realize they'd keep a tighter stop loss, just to realize that the price has just come back and stopped them out before pushing back into that direction again. They're not waiting for no confluences. And then traders are ignoring volume. Breakouts with low volume just equals to traps because it's not broke out here leaving fair value gaps. It's broke out just chopping around in the same area before coming back in to the opening range. I've seen traders just full porting their accounts on a breakout, using too much of a large position and just blowing their accounts because the trade is just gone against them and their stop loss is too tight and it's just blown their accounts. There's traders that trade ORB during a news event where the candles just blow past in the opposite direction, stopping you out again whilst you've full ported on that account, and also when price are not making clean highs and lows. But like this one, if you followed market structure, this one made a clean higher low, creating a higher high, creating another higher low, creating another higher high, creating another higher low. So if you followed market structure whilst using the ORB opening range breakout, you'd probably have a clearer and better win rate and a clearer entry rather than just entering here on the breakout where price goes against you, almost stopping you out before pushing to the upside again or possibly stopping you out. So traders, that wraps it up for today. A nice quick video on the ORB strategy opening range breakout. If you got value from this breakdown, make sure you hit the like button and drop a comment and subscribe so you never miss the next strategy lesson. And if you're ready to take your trading to the next level, check out my full trading course. I dive way deeper into strategies just like this with step-by-step guidance. Click on the link in the description below and see you guys in the next one. Peace!